Hello, hello, hello. Is anybody there?
Good day.
Hi,
Good day.
hello, everybody. I hope that everybody is well.
We're good. We're good.
Okay. I'll take that to be a yes.
Okay, thank you.
All right. First things first. Let's talk about midterm exam. How was it?
It was good, but we ain't get our grades back yet.
I know. I know. And the reason for that is I was spending a little time finishing up some other grades for another program. So, but you guys are almost done. I'm just 1 or 2 pages away. So hang in there. You'll be getting your grades pretty soon.
Okay, which day can we expect?
Which day? Oh my God, you guys are tough.
All last week I sitting there talking to my friend. I'm like, my lecture say by the weekend. I keep checking my email. I don't see it. So I say, you think I should call him? She's like, no, leave that man alone. He can send it when he's ready.
Actually, the plan was for the weekend. I had it all laid out. That on Saturday or Sunday, I was going to just get to them, and then all hell break loose and hasn't stopped yet. So I don't know what the hell's going on with these issues, but you know when it rains, it pours. So when
Okay.
today's Thursday, I would say not tomorrow, Friday, stinky day. I would say sometime on Saturday. Okay. I don't know what
Okay.
time, but it'll be sometime on Saturday. Okay. All right. Did you guys get the notes that I sent?
Yes, sir.
Yes, we did.
Let me just call off the topics for those notes. I want to make sure we're on the same page. I think the first one was called vouching, yes?
Yes.
Okay. And the second one was called verification of assets and liabilities.
Yeah.
Okay. And the next one, verification of assets.
I think one is missing because I don't see 7.
What's the next topic you see?
That is practical application. And then the next one was professional ethics.
Okay, so the one with practical applications, that doesn't have verification of assets anywhere on it?
Sorry,
Remain on notes, you send. Good afternoon, everybody.
Good afternoon,
I
yeah.
see verification and valuation of assets and liabilities by the author. Meaning of verification.
Yeah, that one, verification.
Spicer and Pegler.
Well, that would be what I call the third set of notes. So far, we have verified vouching and we've verified that you received verification of assets, liabilities. And now the next one you say is practical applications, right?
Yes.
Okay, practical applications. And then the last one I sent would have been professional ethics. Okay, great. Just want to make sure we're on the same page. We've already completed the first module for the second half of the semester on internal controls. So I hope you've started your review and note-taking. Remember, time passes quickly. Don't wait until the final week before the exam to try and catch up. Every week, read over your modules again, make notes, study your notes in between lunchtime while you're eating, study a few notes. And the night before you go to bed, if you can't sleep, study a few notes, get up 4 o'clock, study some more like that. I know that doesn't sound exciting, but it all adds up and leaves you feeling much more comfortable with the information and ultimately the examination. At least that's how it works for me anyway.
Bunch of notes.
Sorry?
I say just bunch of trying to suck up a bunch of notes.
Yeah, no doubt about it. It sucks. And I know the feeling because a couple of years ago when I was doing the Series 7 examination, they gave me this big manual from here to thy kingdom come. And they said, you need to know that for the examination. The exam will be 6 hours. Go home and read it, prepare it, make notes, whatever. And they threw me in the doggone. I'm like, really? So I know it could seem overwhelming, but if you do it in little pieces at a time, you'll find that it's far more easier to manage. Okay, like do 2 or 3 pages a night, make some notes, review it, go to sleep. Next night, 2 or
You
3
got
pages.
more stuff to give us?
That's it. No more stuff.
Okay.
Those 4 that we just talked about, along with internal controls, 5. That's all you will be responsible for. So you know in advance what you have to do. You can plan it. Okay, for sure. All right. So let's see who is in the room. We are now in week number 1, 2, 3, 4, 5, 6, 7. Week number 8 already. Man, where does the time go? Danelle, are you in the room?
Yes, I'm here.
Okay, there you are. There you are. Okay, let's see who else is in the room. India.
Right here.
Oh, there you are, India. Excellent. Excellent. How was the exam, India?
Oh, it was all right.
Okay, just checking. And India is a faraway place, so make sure you don't get left out of the blah, blah, blah. All right, good stuff. You're hanging in there. That's fantastic. Okay, let's see who else is hanging in there. Gretchen, of course, is here. No place to go.
Yeah, you heard my voice already.
Indeed, indeed. So we all agree that today is week number 8. Is today week number 8?
Yeah, today's week number 8. Because we have 4 more weeks to go. I know that much.
Correct. And you should make sure you keep track so you don't lose track. So after today, we have 3 more class sessions and then you have your final exam. All right, keep that in the back of your mind so you don't lose time and misstep. Okay, Rosalie is here, of course. Heard her voice already.
Yes, I'm here.
Indeed. Let's see who else. Ebony.
Here.
There you go. I saw those 2 eyes pairing Ebony.
Yes, because I was anxious for these grades. I'm anxious for the grades.
Yeah. Not to worry. While you're studying for your thing, somewhere between now and Saturday, your grade will roll in, and I hope it's the one you are looking for. But
I hope so too.
remember, this midterm grade is not your only grade. You have a final exam grade to go, you have a paper to go, and so on. So don't get stuck on the midterm. You'll get it.
I know, but
at the-
that paperwork is another thing that has me pull up my head because there's so much reading.
Yeah, I know, and you have like 2 little angels who won't let you breathe. But
Exactly. So I find time throughout the day when it's quiet, not too busy at work, to kind of jot my notes and highlight some stuff. And
I understand completely.
yeah, that goes.
Yeah,
I wish I could do it, but I was busy at work. We have some major stuff going on and like overwhelmed and all. So I gone into that exam feeling overwhelmed just from work alone.
that's from work alone. Yeah. What I have found for working people is 2 things, and a lot of people don't like these 2 things. But I'll say it one more time for working people. They don't like it, they hate it, They don't like it. One, working people should go to bed and get up at 4 o'clock to study and review and whatever they have to do. So you go to bed tired and get up rested, and when you rested, that's when you do your best work. If you try to do an hour or two at night after working all day, I'm not saying it's impossible, it's just more of a struggle. All right. But a lot of people don't like to go to bed and get up earlier than their normal time. They hate that. It is a little stinky, but after a while you get used to it and the benefits are fantastic. Once you wash the sleepiness off your face and sit down for 5 minutes, you'll feel rested and much more happy about the things you have to do. That's the first thing for working people, especially working people with children. The second thing I tell working students, the week is a hard time to study, even though you make time an hour here, an hour there, 2 hours here, 2 hours there. It's a hard time. But when your weekend rolls around, I know everybody has weekend stuff going on, but when your weekend rolls around, that's your time to put in the majority of your hours. What do I mean? If you get up first thing in the morning and spend a couple of hours, 3, 4, 5 hours, studying, reviewing, note taking, whatever, then you can get up and go to the mall, go to the food store, and blah, blah, blah. But by the time you do that, you would have been rested. I mean, you would have been studying and note taking, etc., rested when you first get up, as opposed to going out first and coming back home tired and then trying to, man, I'm tired. See, that's the first thing. And then on Sunday, a lot of people go to church. If you go to church, okay, church gets out at 12 o'clock, come home, don't sleep the whole day, don't go out to visit folks all day and all that. Take the next couple of hours. If you have to take a power nap after church, fine, but take another 3 or 4 hours on a Sunday afternoon and do your best work. Point is, the weekend is your best time to do the core work you need to do. Now, a lot of people have a lot of things going on, things that interfere with that, but I usually suggest that to working students. Okay, at least until the semester is over, and then you can go back to whatever crazy stuff you have to do. Okay, I've found that to be a very effective way to stay on top of your game. Anything other than that can leave you struggling and so on. Okay, Karen.
All right, y'all.
So Karen, were you here last week?
No.
I know we all wondered. We all said, "Where's Karen?"
I was working OT at work, man.
I figured you got stuck in that bloody bank of the Bahamas. I think
Yeah.
I out aloud. I said, right now she's stuck in that bloody bank. Uh, okay, but excellent, you're back. They didn't interfere with your midterm exam, I hope.
No, I was there.
Wonderful, good. I know you have a lot of challenges there because a lot of things that need to be done. All right. Who else is on the list? Okay, that's it for us. All right, so welcome back, everybody. Hang in there. You're almost at the end. Okay. Don't give up, no matter how stinky it might seem. Nothing is over until the fat lady sings anyway. All right. Before we go into vouching, can somebody say something about our discussion last week, internal controls? In a nutshell, in your own words. Nothing fancy, just as you see it. Internal controls. What is it? How does it work? Why do we have it? Don't be bashful, let it rip. I'm not looking for a right answer, I'm just looking for chit chat.
Just to ensure that no one, the internal controls are there to ensure that no one manipulates or make any changes, just to kind of control the environment in the workplace.
Yeah, to make sure that nobody is involved in any hanky panking. What are some of the things an organization might do? to set up what we call a strong internal control? What kinds of things might they implement?
I don't like when you do that.
Anyone?
Give
What might,
audits to make
sorry?
sure, give audits, internal audits to ensure that the policies and procedures that management put in place are effective. And especially they compare it to any transaction to make sure it's those procedures are being followed.
Yeah, actually, the establishment of an internal audit department really a form of internal control, a major significant form of internal control. Not every organization has an internal audit department, but if you can set one up, that would be a great way to keep track of whether people in the organization are doing things correctly according to policy. Okay? So yes, establishing an internal audit department is a major internal control feature. In fact, external auditors are much happier when they walk into an organization that has an internal control department because now at least they have some idea that there's a very specific group that's checking the firm even while the auditors are not there. Okay, very, very important. Okay, what about segregation of duties? Anybody ever heard that expression? Segregation of duties. No? What do you think that means?
Making sure the person who verifying don't authorize, like that.
Correct. Simple as that. Making sure the person who authorizes doesn't do two things or the same thing, one signature. One person checks it, one person approves it, one person authorizes it, or some version of that. The idea is to ensure that no one person carries out all the functions. Okay, very serious thing. Okay, the other thing is in terms of internal audit, sorry, internal control is self-checking. Remember we talked about self-checking where everybody, the work is set up in such a way that everybody checks everybody else in one form or another. And it should be that way so that employees themselves are able to monitor each other and make sure you're doing things correctly, which is why everybody needs to get the same training, get the appropriate training, so that if somebody's going off course deliberately or not, the other person will be there to bring them back in line, and so on. Okay, these are all important forms of internal controls. Remember, we mentioned also having a warehousing officer, for example, if you're bringing goods into the warehouse, if there's nobody to verify, all kinds of crazy things will happen. Sometimes crazy things happen, even having somebody at the door. Because sometimes, no matter how well our internal control systems are, what is the word that we said can mess up any good internal control system?
Management and goals with line staff.
Yes, what word do we call that? It's the C word.
Collusion.
Collusion. Okay, that's the dirty word of any organization. Collusion, when two or more employees get together and decide they're going to steal together, defraud the company together, misappropriate funds together, run off with inventory together, and so on. And that kind of behavior is very difficult to detect from time to time. Okay? Sometimes you might get lucky, as I said, somebody might talk, somebody might accidentally make a mistake and you find out, or let us pick it up, maybe, but collusion is hard to pick up. And that's an organization's worst nightmare. But again, in a self-checking environment, we're hoping that it becomes more difficult for people to collude. And one of the ways that one of the internal controls that we put in place to try to keep collusion to a minimum is to make sure that people don't work together in one area for too long. Because sometimes when folks work together in one area for too long, they start coming up with fancy ideas and start agreeing on things. And then the agreement leads ultimately to collusion and malfeasance within the organization. Okay? In fact, in some organizations, the folks work together for too long, they end up getting married. How about that? Okay. They start off as strangers, they become friends, they get into create a form of relationship, they fall in love with each other, say, man, this is great, let's get married. And then the organization has to split them up. You go to that branch, you go to that branch, and so on. Why is it that organizations do not have spouses working in the same branch or department?
Conflict of interest.
Yeah, it's a conflict.
And then they might collude.
Yeah, and they might collude for sure. All right. So if you started working together and end up getting married, don't be surprised if they send you to another branch. It's for everybody's protection, and it is a form of internal control as well. Okay, for sure. All right. So if after all the examinations, etc., and you don't think you remembered anything about internal controls, there you go. That part of the discussion, I'm sure you will not forget. And that's the important thing, because this part of the discussion that will keep you vigilant in any job you go into. And if only you're able to be vigilant and recognize some of these things as you work and be able to identify the good, the bad, and the ugly about the internal control system, then this whole class thing would not have been a complete, whatever you call it. Okay. Of course, I've already told you, none of it will be. A lot of this stuff will be beneficial to you in more ways than you can imagine. You may not see it yet, but it will be. And you will look at things differently at the end of your 12 weeks. I can assure you, when you walk into your organization, when you see certain things, some of this stuff is going to kick in and say, wait one cotton picking minute. Okay. All right. So, vouching. What in the world is vouching in the audit world? Okay. Really, vouching is a fancy word for examining the documents within the company. Okay? And when you examine the documents, you are actually looking for evidence, supporting evidence, okay? So that you can be satisfied that the information is accurate. Okay? So somebody brings you a check to sign for $3,000 payable to John S. George, which no longer exists, by the way, so be careful. Anybody in this class knows about John S. George? No?
I know. Yeah, John's Church just closed down.
Okay. So 1%.
Them, they know too. They've been in there before. They just acting like they know.
And they're acting like they don't know about John S. George.
That's
Yeah.
right. John's George closed down not long ago. I don't know if it's even 10 years yet.
No, not certainly not 10 years.
So
Maybe
that's Daddy John's George.
I know what it is.
And they've been around for decades.
very much
That
so
was- that was-
before certain people in this class were born.
No man, before they was born, but it's still been around even though when they're adult. Like,
I know. I'm saying it's been around before certain people in this class were born. Been a
but
long
it's
time.
been right. But how long they been closed down now? Not even 10 years yet.
That's
No.
probably only 3 years or 3 or
Yeah,
4
so I
years.
said the judge just closed down.
They
Yeah.
just
What day
the thing is now on Palmdale.
Right then, by where Royal Bank is in Palmdale.
Right. A year or two before COVID, they closed.
Yeah.
Okay.
So what that is? Sorry.
What is John S. George?
Yeah.
Okay. Somebody.
That's why when we used to carry you to buy get Christmas the presents, and they used to send all kind of little household goods and stuff. And I used to have Midnight Madness, I think.
Yeah. How?
That's who
furniture-
started that Midnight Madness thing.
Yeah, plumbing goods and furniture pieces and all kinds of stuff for the home. They sold at John S. George. Okay, just about everything you could think of, for sure. All right, interesting. What about home furniture? Anybody knows about home furniture?
Like old.
Gretchen, you know about home furniture?
I also
Okay, your colleagues do not know anything about home furniture.
home furniture, what used to be in Palmdale,
Yes,
by where Lowe's is now.
yes, that whole area.
All them things been around when they was around though. Like
Nobody seems to know.
they didn't have to pay attention.
Okay, or maybe yeah, they were never really involved with those areas.
That probably happened. I was be checking.
All right, how time flies. So when you are vouching, you're examining documents. And you're examining documents to make sure information is correct. So if you get a check payable to John S. George for $3,000, would you just sign it and give it back? Anyone? Would you just sign it and give it back?
I didn't understand the question.
You're right. Somebody brings you a check to sign for $3,000. Would you just sign it and give it back?
No.
No. What would you do?
You mean if I'm working at a company and somebody asks me to sign a check?
You're authorized to sign, and they bring you the check to sign because you're the person who has to sign the check. Would you just sign it?
No, you need the supporting documents to see if this is legitimate.
Absolutely. And this is what the vouching process is all about. Examining the documents for evidence to make sure that what you're signing is the correct thing and the correct amount and the correct reason. All right, that's what we refer to as vouching. There are some people though that get so comfortable in organizations if they know the person who brings the check, they don't check. They say, "Oh, Susie brought it, just sign and give it back," which is not good. Because one of these days, Susie might get wise and realize that you don't really check anything, and then suddenly she brings you a check, and the check is made payable to Susie's auntie, business that she set up somewhere, and since she knows you don't check, she'll bring it to you to sign, and then when you sign it, she'll go ahead and deposit it or cash it. Okay? So vouching is a very important exercise. When auditors come in, internal or external, when they come in to check entries and transactions to see if everything is in order, they are actually vouching. And so if you hear an auditor saying, "Look, I need these things so I can vouch them," now you know what they mean. You're not in the dark anymore. Vouching is referred to as the acid test in the audit world. Why? Because it is the ultimate review by the auditor, actually looking at the documents and testing them against all the supporting documents to make sure that there's truth in the transaction. A lot of people think because transactions are recorded in the books that they're all true and correct. That is not true. They are only as correct as the vouching process and the internal control process allows them to be. If your person's examining documents properly, the information that goes into the system will be better information. If nobody's examining properly, checking for accuracy, making sure that everything is in order, then a lot of things can get by and a lot of incorrect information can get into the accounting system as a whole. Okay? So Dixie had something to say about vouching. And he said that vouching has to do with comparing entries, whatever they might be, with the documents to ensure that they're supporting evidence. That's all. It's not complicated. That's the great thing about vouching. It's a very sophisticated sounding word, but it's not a complicated process. But it's amazing how many people bypass the vouching process, which is bypassing a major internal control requirement, which ultimately leads to problems for a company. Incorrect information, theft, and so on, fraud, that sort of thing. Okay? So it's not to be taken lightly. Persons who have the responsibility of checking and vouching and signing off, it's very important that you check all the relevant paperwork, not only to make sure that it's a legitimate transaction, but also to make sure that the numbers are correct and the amounts are correct and the reasons are correct. Don't be too busy when you get a check, for example, or you get a document to vouch to make sure that you do it properly. Somebody tries to rush you, then you should report it as a suspicious transaction. Why are they trying to rush you? Okay? Because sometimes people are rushing you is a sign that something could be wrong, depending on where you work. So beware. I got money, gotta go lunch. And they see you talking to somebody else, and then the third person pull out your collar, and then you're thinking, "Oh man, I'm too busy," and you just sign or say, "Yeah, it's okay." Okay. All right. Anybody in this class deals with vouching? Anybody does any vouching in this class? No?
No, not currently, no.
You may not think so.
Vouching, you mean that's a separate job description by itself, eh?
No, it's not a separate job description. Vouching is just checking documents to make sure information is correct.
That's all
Well,
that
I
is?
do that.
That's
I
all.
verify.
Yeah, I hope so. I hope a lot more of you do vouching in some form or another.
Oh, I
Oh,
didn't, I
Make it
thought
sound
you
very
said,
simple. I think I can
uh,
remember that now.
Go ahead.
oh, okay, all right then, yeah.
Yeah, I'm sure you do.
Yeah,
Okay.
like for example, Indy, like before we send down wires and stuff like that, we had to make sure that for example, the invoice is correct before we
Yes.
stuff like that.
Yes. Before you send out a wire transfer, you have to check everything.
Yeah,
That's
make sure
all.
that SWIFT code is correct.
Yes, that is vouching. And when the auditors come in and if they pick that up in a sample, they'll do the same thing to make sure
Make
to
sure
see
the money
if you
don't
did it.
go to the right account.
Of course.
Make sure the right account is being debited, stuff like that.
And it's going to the correct recipient.
Yeah.
I had a case the other day with a company in New Providence. I won't call the name, but they sent 3 wire transfers of $45,000 each to a particular location. And when they discovered that where the money went was not the actual correct place, the email that they had sent had a slight change in the email from the original email. And so that diverted the money to some other place rather than the intended location. By the time they found out later that day or the next day and tried to get the bank to stop the wire payments, it was too late. The money had already been released into somewhere, a dark hole somewhere. And to this day, they have not recovered the 3 payments of $45,000. Okay? So, suffice it to say that this vouching checking process is key, not only for when the auditors come in, but the persons who work in the organization from day to day. Remember, the auditors only come in to check to see if you did it right. The most important thing is that you do it right as the employee of that organization. Because by the time the auditors come in, everything is finished. Months later, okay? So they're just checking to see if you did it right. Do not underestimate the importance of the vouching process. Okay. So if vouching is checking for accuracy and completeness, then what is a voucher? Anybody knows what a voucher is?
Well, you mean read it?
Yeah, I don't mind if you read it.
Any documentary evidence supporting the entries in the record is called a voucher.
Keep
Any
going.
document which supports the entry in the books of accounts and establishes the arithmetical accuracy is called a voucher.
Absolutely. Thank you very much. That's it. So if I say what is a voucher, then you should have no stress. Just let it rip. It's only documentary evidence, okay, to support transactions or entries. That's it. No big deal. Okay. So you're looking for support to make sure you have the right information, and you're looking to make sure that the information is accurate or correct. That's it. The voucher is the document, the vouching is the activity of doing. That's all it is. Okay. All right. So I think I've chatted enough already. Let's see if anybody is up and kicking. I think I'm going to call on Karen today because Karen was not with us last week, working in that bloody place until thy kingdom come. Did they let you go before 12 midnight, Karen?
Yeah.
Oh, good. Because tell them they can't have you driving around too late at night. That's the other thing. All right, if something happens to you, they'll just bring in Karen number 2. And then
Right.
we can't have that. All right, Karen, why don't you pick it up with examples of vouchers?
Okay. Hold on. Okay. Examples of vouchers. A bill, a receipt, an invoice, goods received, note, salaries and wages sheets, goods inward and outward register, stores, records, counterfoil of a checkbook, counterfoil of pay in ship book, bank statement, bank passbook, delivery receipts, agreements, a material requisition slip, copy of a purchase order, minute book, memorandum and articles of association, partnership deed, trust deed, and prospectus are the examples of vouchers.
Now, before she goes on, everybody, while she or anybody is reading, if you see something that is said that it's a little weird, you don't get it, you heard it somewhere, you're not sure what it is, please feel free to ask, what the hell is that? Okay, for sure. All right, keep going.
Importance of vouching. Ensures genuineness of the transactions. One gets to know the details of the transactions, helps auditor to know relevance of the transaction, facilitates proper allocation of capital and revenue expenditure, detects frauds and errors, decides authenticity of transactions, ensures proper accounting, ensures compliance with the law, ensures proper disclosure.
Yes,
Special, okay. Go ahead.
keep going.
Okay, special considerations to be borne in mind by the auditor in the course of vouching. Number 1, date of the voucher, the name of the party, tick and audit rubber stamps, authorization by the designated persons, revenue stamp, transaction relates to the business, revenue versus capital transactions, amounts in words and figures, account headings, no assistance from clients when checking receipts, verify receipted invoices, missing vouchers, important documents, vouching of cash transactions, proper filing, signature of payee, nature of payments, notations in the audit notebook, alterations of voucher control numbers.
Stick a pin again, Karen. Notice that long list, 20 items, and that is
Mhm.
not all of them. These are just some of the key important ones. Notice the kinds of things auditors are looking for when they come into your organization. They're coming in to see if you, meaning you persons as employees, are doing things according to the job that you have to do. So, okay. Okay. So make sure while you're doing your day-to-day work, whatever your responsibilities are, make sure that those transactions are complete. Make sure they are correct. Make sure that if you make any alterations, you may put an initial next to it. Make sure that you have it properly dated. Make sure that all the documentation is there. All of these things are what auditors will be looking for when they come in to do their vouching. Okay? If you're supposed to stamp a document closed, complete, paid, or whatever, make sure the stamp is there. And so these things are just here to make you aware of the kinds of things that your auditor, in or out, internal or external, will look for when they come in to see whether or not you, the employee, are doing these things according to your job description. Okay? So if you're an employee that do things halfway, quarter way, whenever you want, eventually you're going to run into trouble from an auditor of some kind. Right? All right, keep going, Karen.
Okay, objectives of vouching. To ensure that all the transactions are properly recorded in the books of accounts, to see that the proper evidence supports all the entries of the transactions, to make sure that fraudulent transactions are not recorded in the books of accounts, to see that all transactions relating to the business are recorded in the books of accounts, to see that all transactions are properly authenticated by a responsible person.
Who's the responsible person, anyone in the firm? Who's that person?
I guess a manager or
Yeah,
supervisor.
So of course, a manager or supervisor, absolutely, very good. And again, remember, this information is not just there for you to pass an examination, it's to get you thinking like, wait a minute, when I go to work now, I need to make sure that everything I'm supposed to do, I do it, cross my T's and dot my I's. Because sooner or later, somebody might come around, check my stuff. And when they check my stuff, are they going to find that I'm doing it properly, accurately, and completely? Am I getting all the
Mhm.
that I need in order to do whatever I need to do? Because if I don't, and they find out, they're going to ask me, this is not authorized. Who gave you the authority to do this? And if you can't answer,
Mhm.
they might send you home, depending on where you work. Okay? That's how serious this stuff is from not only from an auditor's perspective, but also from an employee's perspective. And that's really what I'm trying to get you to see. Remember, you're not doing this class to become external auditors. You're doing this class to be aware of what auditors are looking for so that you can be complete in the work that you do as an employee. And for some of you, if you happen to land in an internal audit department, then you have more ammunition to work with than the other guy, depending on where you are. Okay? That's the beauty of this whole thing. All right, keep going.
Auditing techniques. To an auditor, auditing techniques are the working tools used and applied for identification and examination of evidence which have been traced by audit procedures. The dictionary defines the word technique as the method of performance or execution, procedure, method of conducting an affair, and course of action taken or an act performed. While we can state that all-inclusive list of techniques can be outlined, even with the addition of new or improved methods or techniques, an all-inclusive list of procedures is difficult to prepare. Techniques are rigid and limited, but procedures can be many and varied depending on the audit objectives. An all-inclusive list of audit procedures can be prepared as these change based on the audit objectives, but the following list can be used for audit techniques. Auditing procedures are methods of applying auditing techniques to phases of a particular audit. The audit procedures adopted in different engagements result from the
Judicious.
judicious
Mhm,
application of the available audit technique. Audit procedure is concerned with the general assertions
mhm.
like existence or occurrence, rights and obligations, completeness, valuation or allocation, and presentation and disclosure that may be made regarding an account. Audit techniques are concerned with the examination of evidence traced by audit procedures.
Now, before you go on, Karen, let me say this for everybody. That last note that you made, where the audit is concerned with assertions. Assertions simply mean whatever you put forth. Like I assert that you are a girl and that's it. Whatever you put forth is an assertion. So when an auditor comes in, it's looking to see what activities are going on in the firm and whether the assertions or activity are consistent with the policy and procedures and the generally accepted accounting principles that are required for any organization. Okay. The auditor is looking for what, as you said, the existence or occurrence, making sure if a transaction is on paper, then did it really happen? Because some people, for example, there are some loan officers in the past and maybe in the present who have booked loans that we call fake loans. They're no real customers. The loan officer creates a fake customer, a fake account, fake loan documents, have their boss sign off to approve it, and then go ahead and cash the check and keep the money. And every month they pay the loan back. Okay. So this thing about existence and honest activity, these are very important issues for the auditor. And by extension, important issues for employees to keep in mind as you do your day-to-day work. Know that you will be scrutinized for all of these things: accuracy, existence, completeness, proper valuation if you're responsible for valuation, proper disclosure of information if you're responsible for disclosing information, no lying, No putting stuff that is false information and all this kind of stuff. Whatever we're responsible for in our job, we expected to do it completely, properly, and accurately, because that is what the auditor is coming to see, whether it's internal or external, accounting or operational. These things are going to be standard across the board. Okay. All right, keep going.
Okay, principal auditing procedures. An all-inclusive list of audit procedures is difficult to prepare. Judgment and experience remain the basis for the determination of the type and extent of audit procedures. The following may be cited as the principal audit procedures. Reviewing, testing, and evaluating the internal account control relating to inventories, purchases, payroll, sales invoice preparation, stock valuation, depreciation, accounting and analysis, and the routing of invoices. Inspecting, counting, and calculating assets, including cash, stocks, investments, plant and equipment, furniture, inventory, and obtaining confirmation regarding the validity of debtor and creditor balances.
Right.
Obtaining proof. Go on.
Keep going.
Keep going.
Keep going.
Okay. Obtaining proof of accuracy. A copy of final inventory listing can be obtained and its clerical accuracy checked and tested. Obtaining the earnings records of employees and checking the same for accuracy with the original appointment letters, appropriation of profit, and the board's resolutions.
Let me say this before
Reconciling,
you-
comparing, and confirming.
before you go on, Karen, let's go back
Okay.
to let's go back to number 3, everybody. Notice obtaining and checking the clerical accuracy, testing the earnings records of employees, and checking the same for accuracy with the original appointment letters. What does that mean? In some organizations, some payroll officers are up to no good. What they do sometimes, for example, if an employee resigns or dies, they do not cancel the payroll for that employee. They continue to have the payroll for that employee done, but they route the money to an account of their own until it is discovered. Okay? And so when auditors come in, they look to make sure, was everybody alive last week? Did anybody leave the firm last week? And somebody say, yeah, 3 people. And say, which 3? Oh, Danielle, Karen, and Gretchen. So really? If they left, how come they got paid for the last 6 months? See my point?
Mhm.
Okay, folks? So that is just an example of the many, many kinds of things that auditors are looking for, that if you don't work in these areas, you might not be aware of what happens. Okay? Just know that wherever you work, if you have internal or external auditors checking, sooner or later, somebody's going to discover something about what you do, especially if it's not correct. Okay? All right, keep going.
Okay. You want me to go on?
Keep going.
Okay.
Number
Hold
4.
on. Okay. Reconciling, comparing, and confirming. Sales invoices may be reconciled with the total charges to customers. The reconciliation between the cost account records and the books of financial accounts is an example. The bank reconciliation statement provides a good measure of confirmation of cash transactions. Inventory can be compared and confirmed to inventory documents and minutes of the board of directors and can be checked for pledges or assignments. Observation and inquiry about any excess, slow moving, or obsolete inventory. Accounting of all pre-numbered inventory tags before and after the physical stock taken. Verification of the evidence relating to the ownership of assets and the existence of assets and liabilities as a part of auditing practices and procedures is the principal duty of the auditor before he certifies that the assets and liabilities that appear in the balance sheet exhibit a true and fair view of the state of affairs of the business.
Thank you very much, Karen. Great job, great job. Um, Fantastic. Notice, notice, uh, the other kinds of things auditors are checking other than the payroll. If you work in an organization where inventory is moving slowly, they will check to see if all of the inventory is actually present. Because sometimes when inventory is moving slowly, people start stealing their share because nobody's watching it because it's just sitting. Okay. If it's obsolete, not being used anymore, the auditor will want to know how much was supposed to be there. What were the plans for the inventory that is obsolete and no longer useful for the company? Because again, if obsolete inventory is sitting around, people after a while start deciding, well, maybe I can take a couple of these. Does the company claims it no longer has an interest in them? Because the company is no longer using a particular asset, it doesn't mean that it's our right to just pick it up and walk away. Okay? But it happens. Pre-numbered documents are very important. If numbers are pre-numbered, then you cannot fix it by adding any number, making any changes. If you have a set of invoices that you prepare and you get to 997 and then the next one is 999, the question obviously is what happened to 998? And if they came from the printing shop pre-numbered, then you cannot play around with them because they are already there. And this is why we have these pre-numbered documents in order to help us to control the existence and the movement of documentation. Okay. And of course, let's not forget number 6, verifying the existence of assets and liabilities. Believe it or not, there are some companies in the world that show assets on their balance sheet, but when you go to check them to find out where they are, you cannot find them because they do not exist. They just put them there to make the balance sheet look stronger. Okay? So be assured that because everybody looks like they're not up to something, there's always somebody at least who's up to something. Otherwise, we will not need internal and external auditors. We will not need internal controls because everybody will be considered above board. Problem is, not everybody's above board. And interestingly enough, even with controls, with audits, people still try to get away with murder. And every now and then they are successful, unfortunately. Okay? So, because assets are on the books doesn't mean that they exist. Because liabilities are on the books, it doesn't mean they exist. You have to check. Make sure they exist for real. Okay? It's like buying a piece of property somewhere, ladies, and they tell you this property is a great location out west. You can be living among the muckamucks when you build your house and blah blah blah. And so you take the word of the real estate person or whoever's selling the property, and you assume all is well. Until a year, 2 or 3 later, you decide it's time for you to start building, and then you discover that what you bought was swamp land. Anybody knows what swamp land is? Anyone?
No.
Oh,
You say
well,
spot land,
yes, swamp land.
Swampland.
Yes.
Oh, that's land that cannot be filling. Like we have some swampland. Okay, how you fill it in with water, it keeps getting swampy because the water table is too high.
Yeah, there's too much water in the area and you cannot fill it in properly because the water keeps absorbing it. And so therefore you cannot put down a foundation. And if you do put down enough um, um, fill for a while and put down a foundation, after 5 or 7 or 10 years, your house might start sinking if your luck is really bad. Okay? So beware. You're
That's
going to
like
buy.
almost like pine wood, even though they don't sink.
We don't say it's swampland, but in a way, Pinewood people got a really, really bad deal as far as the low-lying areas, because every time it rains, they get flooded. There's no sewage air drainage, and the land is very low, and as soon as it rains, the water rises, and people are constantly mopping up their houses and throwing out furniture for the last 20 or 30 years. Unfortunately, they, for some reason, no drainage has been put into Pinewood after all these decades. People have suffered and spent all kinds of money, poor, hardworking people, and government after government after government has not seen fit to try to put a proper drainage system for the poor residents of Pinewood Gardens. And why don't they leave? The answer is simple. That's where their homes are, that they've been paying mortgages on for the last 20 or 30 years. And so where the hell are they going to go? And who are they going to sell it to? So the question is not why don't they leave? The question is the area needs to be put in order as it should have been from the beginning. In fact, no license should have been given for building or anything of that nature until all the proper infrastructure, including drainage, were in place. Maybe they should have had an audit done first before giving approvals for that project. But that's a whole other unfortunate situation. Okay. All right. Thank you very much, Karen, for that. Okay, who's next on my hit list? Let's see. Danelle, are you still in the room? Hell no.
Yes, I am.
Oh, you're still in the room.
Hello?
Okay. Hi.
Yes, sorry.
No problem. No problem. Okay, Danelle. Why don't you pick up a test checking then? Test checking. Remember, what were we talking about before test checking? Anybody remembers? What were we talking about so far? Up to
Audit.
this
Oh,
point? What's the word?
vouching.
Vouching. Yes, vouching. And what is vouching again? Anyone?
Um, vouching is the examination of documentary evidence in support of entries to establish accuracy.
Absolutely. Simple as that. And even if you don't remember the exact words, make up your own words as long as you say it's checking documents and make sure they're accurate. That's it. Doesn't have to be the exact words. Just make sure the meaning is clear in your own words and you get credit. Okay. So if you're doing a testing or whatever, don't panic like, I don't remember the exact sentence. So what? As long as you use the words that convey the correct idea, that's usually good enough. Okay. Now, if you're one of those persons who have what we call a photographic memory, you can remember stuff and just put it down verbatim, no problem. But if you're not one of those people, don't tread it. Find a way to say it, as long as the proper message or idea is conveyed. Okay, Danielle, test checking.
Test checking. Carrying out detailed checks of each transaction of a large business can be time consuming for the auditor. In auditing the accounts of a business, every single transaction is not usually checked by the auditor. Instead, a representative number of entries of each category are selected and checked. And if they are found to be correct, the remaining entries are deemed to be correct. This is known as test checking. In organizations where internal checks and controls are satisfactory, the auditor need not carry out detailed checking. He may adopt test checking, a system of sampling employed by the auditor for the purpose of reducing the volume of detailed checking involved in the audit. If when test checking, he discovers that the records checked by him are correct, then no further detailed checking needs to be carried out. Test checking versus statistical sampling. The selection of items for checking can be done in two ways, judgment and statistical sampling. When the judgment method is applied, this method of checking is called test checking. When sampling techniques are applied, it is called statistical sampling. When adopting the test check, the auditor must take the following precautions. Entries selected for test checking must be representative of all transactions. The selection of the items should be random. It cannot be adopted in lieu of vouching the cash book. Client staff should not be aware of the entries selected for test checking. Periods selected for test checking should differ from book to book and year to year. If he should not adopt test checking where the law requires a thorough audit. A number of entries of the first and last month of the year must be checked thoroughly. Tests should be so devised that a feasible portion of the work done by each employee is checked. Control accounts or impersonal ledgers should not be subject to test checking. An auditor should select the test independently without regard to suggestions from the clients or staff. Bank statements and entries for cash withdrawal and cash deposits should be checked in full.
Okay, stick up in
The
one moment, Janelle. Let's look at some of these test checking features she's talking about. Okay. First of all, we know that test checking has to do with using our judgment. We know it's taking a sample of an entire population of a particular area. Let's say if you checking inventory, you take a sample of inventory documents and say maybe those with large balances and say we'll test those particular inventories thoroughly. And if we find them to be correct, we'll assume that all the inventory activities are basically correct for inventory. Okay, that's kind of what test checking is all about. Notice we are told that test checking has to be random. You don't grab them in any order. You just say where the invoice files for the year, and you grab some from this month, that month, randomly, no particular order. And that's why you do not have employees get the information for you. You find out where the documents you want to sample and review, and you pick them randomly as the auditor. If an employee picks them, they might pick documents that they know perhaps are quote unquote in order, and then you don't get a chance to find out what's wrong. Okay. So after a while, employees kind of figure out some things auditors are doing as well, and try if they are able to figure a few things out to work around them, so that if they're up to no good, or they feel that they may make errors that might be discovered, sometimes employees will try to get around the audit procedures. Okay. And test checking is no different, which is why we have the referral to not having the employee involved in that process. Notice also number 6, no test checking should be done where the law requires a thorough audit. So for example, if the courts are looking at a legal matter and the courts order a thorough audit, a complete audit, no test checking can be done under those conditions. Everything has to be checked in detail. Okay, that is a very significant difference from the norm. Okay? And obviously the reason for that is depending on the tenets of the case, it might be necessary that 100% check be done to make sure that whatever is being presented in court is accurate and complete in every single respect. Okay? For sure. The other thing that is interesting is number 11. Bank statements and entries for cash withdrawal and cash deposits should be checked in full. Anybody knows why? Why are they checked in full? Why are we sampling them? Anyone? Why do you think bank statements and entries to the cash withdrawal and deposits have to be checked in full? Why not sampled?
Ensure that proper record keeping is being, the funds are going in as said. Make sure you know stating going on.
Absolutely.
Because I know in our organization, that's what I do. Like when you see me do, like if I sit as a treasurer and I do the treasurer's report, like for that month,
yes,
I make sure and I do it against the bank statement. That means your deposit of the match was in the bank, it should be on your report. And any debits to the account for any, whatever, whether you write a check or whether you have to pay VAT fees or whatever fees, banking fees, all that should be accounted for.
Absolutely. That's what we call a bank reconciliation. Okay? And any company that is not doing a bank reconciliation every month, first of all, it's a serious internal control violation. Secondly, they're leaving themselves open to be defrauded. Okay? By all means, either by employees or employees of the bank. Okay? For sure. If somebody finds out that you're not checking on a regular basis, your cash transactions especially, soon you're going to start losing some of it. Just like leaving your own money on the table and not checking for it, sooner or later somebody spots it, runs off with it, and say they don't know what happened. Okay? So that's a very important area of the test checking. This cash is the only test checking feature that is not subject to sampling because cash is liquid. And cash is actually the most important asset of the firm, and therefore there's no sampling done. It has to be checked 100% at all times. Okay? Just to make sure that all the money is there. Okay? Cash. Cash is a very tempting asset for a whole lot of people, and only the best of us can see it, mess with it, be aware of it without getting stuck on something that is improper. Only the best of us, because there's another side of the world. They can't take it. When they see cash, they become like a cat looking at fish or a bird. They have to have it by all means possible. All right, keep going, Danielle. Advantages. Sorry, not advantage, the extent.
The extent of test checking will depend upon the judgment and discretion of the auditor, but it must be remembered that time unnecessarily spent in routine checking is a waste of resources. Caution must also be taken to ensure that the test checking does not become automatic and unrepresentative. Test checking will be of no use unless the representative items selected for checking are chosen with great intelligence and imagination. Advantages of test check. Go ahead.
Keep going.
Volume of work is considerably reduced. There is a saving in time, cost, and energy. The extra time available can be used to focus on areas of importance. If done carefully, test checking can be quite effective. The disadvantages of test checking. The auditor is always concerned about whether he has missed important items or that errors have remained undetected while test checking. Where the client staff is aware that the auditor resorts to test checking, the staff may become careless. Auditor's liability. Test checking may result in the auditor overlooking errors and fraud and being held liable for the oversight. The auditor must carefully select the items for test checking to ensure, on the whole, that the accounts show a true and fair view of the profit and loss in the case of the profit and loss account and of the state of affairs of the organization in the case of the balance sheet. Surprise check. To avoid audit procedures from becoming routine, mechanical, and predictable, surprise checks are desirable. Surprise checks involve visits from the auditor to the client's office, satisfactory, without prior notice. The elements of surprise should be in respect of time and scope. Items checked during surprise checks are selected without prior notice to the client staff. Such checks are highly effective for the verification of cash, stocks, investments, and the verification of the books of prime entry. It helps in asserting whether the system of internal controls is operating efficiently and thus prevent and detect errors and fraud.
Question for everybody before you go on, Danelle. Has anybody in this room ever been a part of a surprise cash count?
Yes.
No.
Yeah,
Yes,
yeah.
order
What?
petty cash.
Tell us about that experience. How does that experience feel?
Well, I did on both sides where I had to give a surprise count, and also I was on the side of being the person who had a surprise cash count.
Okay, fantastic. So now you have an interesting story, Danielle. Let's start with when you were on the side of being a part of surprise cash count. How did you feel? How did that go? Was it successful? Did you have everything in place? Did they have any gripes?
No, I mean everything was in place, but everything should be in place, especially for a surprise cash count, because basically your at that time your branch you wouldn't want to be the only person whose cash is not in order. Let's put it like that.
Of course not, because now you have
Mhm.
to give an account for what happened to it.
Exactly, and then it would appear as though it's never in order. If we surprise you today and all of a sudden your cash isn't in order.
Yes. And remember, the whole purpose of a surprise cash count is to surprise you, to make sure that you don't know when they're coming, because they want to make sure that you're following the rules on a consistent basis, that anytime somebody shows up, you can subject yourself to the test and, God forbid, be successful. All right. So what about when you were the one doing the surprise check? Did you run into any unusual situation?
Um, yeah,
Yeah.
it,
That's
yeah,
okay. I mean, that happens all the time. That's the whole idea. That's the purpose of the
yeah.
surprise cash count. How did you manage that unusual situation?
Well, I think what happened was they it's- at that point in time, it, sometimes either a entry wasn't passed
Right,
in time. Like let's
right.
say they was closing out the following day and they didn't pass the entry, but the cash is sitting there. That's a problem as well. Even though you over in cash, that's a problem.
It won't balance.
It won't balance because we're looking at the system, we're looking at your book, and your book is saying you received cash, but the system is saying you didn't. And their explanation for something like that would be either the system closed off earlier than when before they had the time to post the entry.
Correct. And
And that's an easy fix. So it's more understandable that way.
yeah, that is an easy fix. Everybody can live with that. We know what the problem is. The what becomes a problem is when it's not an easy fix. That some hardcore cash is missing, cash short, and you cannot find any entry or anything else to support the shortage. And then everybody starts murmuring like, okay, what happened? Okay. And again, a lot of times people think that when cash disappears, that somebody just stole it. That may not necessarily be the truth. Even if you find that all the entries are in place, etc., it may still not be theft. It could be, but not necessarily. Somebody sometimes tell us pay out. Don't tell us pay out more than they should sometimes for some reason. Anyone? Anyone in this room was a teller? No?
I was a teller at one point, and no, I've never paid out more cash than I was supposed to. But there were situations, there were situations where other tellers did that. Yes.
Absolutely. And then they're like stuck because they don't remember who they paid it to. They don't remember what time of day. They just know it's not there. And so now they're stuck. Um, you either paid it out honestly, or somebody's thinking, yeah, right, it's in your purse or something. And it's a kind of awkward situation. Of course, the organization will decide what to do about that. If it's not a regular thing, you cover the difference, or the organization might absorb it depending on how much it is, etc., and move on. Certainly not a situation anyone managing cash you want to be in, teller or otherwise. Okay? So if you're managing cash, you have to be super, super, super careful, watching all the time, checking all the time, Nobody's your friend. Don't let anybody distract you. People will tell you, look the other way, take some money, swear they didn't move it. All kinds of things happen when you're managing cash. Okay, so you cannot be too careful. All right, keep going. Use of ticks.
Use of ticks. Ticks are used to keep a control on the work done by the auditor. Use of ticks should be done with great care while conducting an audit. Firstly, the color of the tick should be determined so that it's unique and will not be confused with that of the client, staff, or internal auditors. Secondly, the types of ticks to be used should be selected. The ticks should be placed at the right places so that the data remains legible and the records do not become shabby. Care should care should be taken to see that the use of the different ticks does not become known to the client staff.
Now this is interesting. All of a sudden you have some KGB, CIA stuff going on with these ticks. Who the hell would have thought that ticks would have been such a big feature in the audit process? After all, we're just ticking to say, yes, I checked it. But auditors use ticks, yeah, to make sure that they've covered certain aspects of the work, and different colors mean different things. The green tick might mean that's a go. The doggone red tick might mean something stinky is going on here. Double check that, do some further vouching, get some more documentation, find out where this goes to the very end, and so on. So they're not just in their ticking, apparently. They're ticking with a purpose. And that purpose includes a certain kind of tick, it appears, and a certain color of tick. That's fascinating. But yeah, do all auditors do it? Not necessarily. But I suspect many, many of them actually do. Okay. All right. Keep going.
Auditing in depth. Taylor and Perry have defined auditing in depth as the examination of the system, which includes the tracing of certain transactions from their origin to their conclusion, investigating at each stage the records created and their authorization. Audit in depth does not mean 100% checking. It is a detailed examination of the selected items from the beginning to the end. Thus, it is used along with test checking. For example, if the auditor has decided to check 25% of purchase transactions, these transactions should be checked in depth. The auditor should check the purchase requisition, tenders, purchase orders, purchase bills, goods received, notes, inspection notes, purchase journal, stock register, bin card, and so on. Thus, the auditor should check the purchase transactions right from the beginning to the end. These enabled him to evaluate the accounting system and internal control.
Okay.
Audit.
That's fine. Thank you very much, Danelle. Okay, notice this in-depth checking is an interesting thing. It doesn't mean checking 100% of a particular area within the organization. It is tied in with friend test checking, which is a sampling process. So you take a 25% sample from the test checking, okay, judicial sampling, or judgment using your judgment. So he says, okay, we're going to check 25% of the purchasing transaction. That's test checking. In depth then means you go a step further. After you take out the 25% to check, you then check each of that 25% that you've sampled in detail from start to finish to make sure that all the rules and procedures are being followed. Any inaccuracies, oversights, omissions, or whatever, the auditor will make a note of, and that in-depth check of that 25% of that particular category becomes the basis on which the auditor will form an opinion. In some cases, if there are too many infractions, when the in-depth check is being done of the test sample, then the auditor might decide to increase the sample percentage from 25%, for example, in this case, maybe to 50%, and then do a further in-depth checking to see if they can minimize the amount of problems and errors they find. And if they can do that, then they say, fine, we don't have to check every single thing. Okay. Now, bear in mind that in some cases, despite the beauty of test checking, which is a sample, and in-depth checking, which is a detailed testing of the sample, so if the auditor discovers that he's continuing to find errors and problems as he increases the sample percentage, I eventually, in some categories of checks, might end up checking almost 100%, especially those categories are important to the day-to-day functioning of the organization. Question, do we do any test checking of cash?
No.
No. Do we do in-depth checks of cash?
Yes.
Yes, very good, very good. Despite all this, you still have your thinking cap on. That is amazing with all this crazy stuff. All right. Okay, thank you very much, Danielle. Let's see who's going to help you to finish this up. India. India always goes to Pakistan for a while. India.
I know you was gonna say me next.
You just had a feeling.
Mm-hmm.
Okay, India, you can pick up with the audit of income. What is
Okay.
income? Anybody knows what income is for a company? What is income for a company?
Revenue.
Yeah, revenue. And what is revenue?
Revenue is
You know what it is, but you don't know how to put it.
Okay, so how does the company generate revenue then? How's that? How does the company generate revenue?
It depends, like on like sales and stuff like that.
Of course, from the sales of goods and services. Absolutely. Not complicated at all. And that's what you mean by, I know it, I just need to figure out how to say it. Okay? Revenue or income is generated from the sales of goods and services. Does anybody know in this class how an insurance company generates revenue?
the premium.
By premium.
Robbing people and not making an excuse not to pay.
Yeah, robbing people. Doggone stinky premiums. Okay?
You know, you don't need for life insurance to be that high.
Sorry?
I mean, not life. I think it's healthy. You know, for it to be that high.
Health insurance shouldn't be that high. Home insurance shouldn't be that high.
Family guardian, their insurance, their health insurance, like $1,000 a month.
Yeah, that's typically what it is for the average person. Now, if you have, the only way you might escape that if you work for a company where there's group cover and the company is paying. But if you have to pay for yourself, dog eat your lunch. And the older you get, doggone, what do you call it? Pit bull eat your lunch. It gets worse, unfortunately. And what is interesting is premiums for older people get higher and higher at a time older people needed more and more. When you're young, you don't need any bloody insurance too much. And that's when the premiums are lower, when you don't need it. And then when you're getting older, they go way up to the sky when you need it. It's a strange and unfortunate irony. Okay? Yet governments all over the world continue to allow insurance companies to do this. Okay? And one of the reasons why insurance companies keep threatening, if you don't let us do what we feel like doing, we'll shut down. Then you wouldn't have any stinking insurance, I guess. But of course, there's always another solution if you're really interested in solving the problem. So far in all the decades with insurance, nobody has been really interested in solving the problem. And the solution is not difficult as usual. It's just that we don't want to do much that is going to be in the better interest of poor, lowly people. How's that? For which the whole purpose for insurance was created. Strange irony. Okay? All right. So let's look at the audit of income. India, let's go.
Okay. Audit of income, cash sales. The cash sales register should be fully checked with carbon copies of the cash sales. Particular attention should be given to the first and last month of the accounting year. A
And let me
summary,
let me just say this before India goes on. These things that we have listed here that we're looking at, these are the things that auditors will be looking at, internal and external, to make sure that folks are not running off and stealing company money. Okay? That's really why we do these things, step by step by step, to make sure that the income of the company is not being defrauded. People are not stealing the assets, especially the cash or other assets of the company. Okay, so keep that in mind while we go. Notice cash sales, see, cash sales register should be what? Fully checked. We already said we never partially check cash, period. If it's $1 billion, put in the machine and start counting. We don't partially check cash. Because cash is so liquid, if you don't check everything, people will run off with bundles and you wouldn't know. You can't estimate it. Somewhere along the line, something's going to happen and you're going to make a mistake. Somebody's going to know you're estimating and find a way to get their hands on it and so on. Okay. All right, keep going.
okay. Number 2, a summary of daily cash should be checked. 3, the auditor should be there more careful where cash memos are issued, even where cash is not received. Number 4, a certain representative item should be subjected to vouching in depth to get an idea about reliability of internal control.
Sorry,
5,
what is vouching again, anyone?
Checking documents to make sure they're accurate.
Simple as that. See that? I told you, this crap is not crap. You know what I mean? This stuff is not difficult. Some of it might swing you a little bit if you're not familiar. But in essence, if you commit to it, it's really quite doable. Okay. The only problem is it keeps your life interferes with your time to mess with it, and that's what you have to manage and plan. Okay. All right. Good stuff. Keep going.
5, cashier and related summaries should be compared. 6, dates of cash sale bills and the date on which the receipt are recorded in the cash book must be the same. If the dates differ, the transaction should be investigated. Where cash sales bills are canceled, all the copies, including original copy duly canceled, should be kept in record.
Which means,
8,
which means that if you do a transaction in cash, you give a receipt or another document, and you have to cancel it for any reason, you don't tear up the papers and throw it away. That what you're really doing is tearing up the evidence of that transaction. That is an absolute no-no, especially where cash is involved. But even where cash is not, but especially where cash is involved. Because some people are famous for doing that with cash transactions. People come in, make a payment, pay some money for some reason, give a receipt to the customer, and tear up the company's copy. Keep the money, especially if nobody's checking. See? Receipt books all over the place, under the table, in the kitchen, in the fridge, whatever. Nobody's keeping track of receipt books. See? And once somebody finds out that nobody's keeping track of receipt books, no number systems, no sequence of numbers to verify, then say, man, this is great. God gave me this job. So people start bringing money in, they write a receipt, and they tear up the company's copy. And then the receipt book disappears. When somebody says, where's the receipt book? Nobody knows. Anyway, go bring another receipt book from in there, under the cupboard, by that thing over there. That's an absolute no-no, but people still have businesses, especially small businesses, so they continue to do this crazy stuff. Okay? All right, keep going.
gain. Yeah, cash or cancel. Where it is a policy of the company to allow discount, it should be determined that the policy is followed. If the sales are made by the salesman, their statement should be verified and reconciliation should be made with the record of cash received. 10. Verify the entries in the cash book and the corresponding effect in the sales account in the ledger.
Okay, before you go on, India, again, go back to 8, everybody. Okay. Where a company policy allows for a discount, like a 10% discount, you have to check to see if the discount is 10%. Okay. Somebody might not follow the policy, give a maybe 20% discount and keep the difference. How about that? Okay. Something as simple as that. Where there are salespeople, where there's insurance salespeople, vacuum cleaner salespeople, whomever they are, these salespeople tend to handle a lot of cash. And if you don't check and vouch their numbers and their documents daily, balance them daily, not every other day, daily. You cannot leave work until you come and balance. And if you don't do it that day, you better have a good excuse or else dog eat your lunch. That's how serious it is, okay? For salespersons of any kind, so that they don't get too comfortable with the company's money in their purses, in their wallets, in their briefcases, or wherever they walk around with them until they're ready to turn it in. In the old days, you had some insurance salespersons who turned in money whenever they felt like it, turned it in short, didn't mark the policy book, kept the money until they could pay it back and mark the book then, and whatever, all kinds of crazy stuff folks did in order to get their hands on the money. Remember, money is very tempting. Okay, very tempting. I remember one time ago when my baby was about 4 years old, I did something very tempting for him. And he's a baby, he's 4. I left my wallet on the table and he wanted some candy. So he went in and said, well, this is my daddy's wallet, I guess. He just helped himself to, he didn't know what money was. He just like took out whatever because he didn't know, thinking when he goes back to, I guess, preschool or whatever, he buy some candy. Okay. When I discovered that he took it out, that was the first time and the last time I spanked him. But I didn't spank him because he did anything wrong. Well, he did, but that's my baby. I spanked him because I wanted him to remember that you cannot touch anything that doesn't belong to you, even if it's your dad's. Okay? And so it's a very important lesson. But a lot of people have not learned that lesson because they still keep trying to run off with money every chance they get for one reason or another. I get it, but it doesn't make it the right thing to do. Okay? All right. Make no mistake, this 100% check on cash is watching cash. There's a reason for that. Companies lose money all the time because they're not checking properly, because cash is very tempting to the average person. Okay. All right. So now in terms of the sales approval process, in terms of the auditing aspects of the sales approval process, she's going to talk a little bit about, okay, what documents need to be seen and what does the auditor have to verify in each particular instance, okay? Again, back to vouching again to make sure that the document is seen and that whatever document is seen, that is properly verified. So let's see how auditors do this from time to time. All right, keep going, India, beginning with the sales or return day book.
Okay. All right. Sale or return day book. Examine the sale or return AA. Mr. Wilkinson, give me 2 minutes, please.
Only 2? Okay. So while she's off for 2 minutes, are you back?
Yeah,
Oh, okay. That was less than 2 minutes, India.
yeah. I just had to do something real quick.
I know. This
Okay.
multitasking.
Mhm.
No problem. Like I said the last time, you guys who are multitasking with this stuff, my hat's off to you. It is not easy. All right. Okay, let's go.
Okay. Examine the sale or return date book for the method of accounting. Check actual movement of goods from dispatch register, goods outward book. Note the period of approval in the case of different goods/customers. Verify whether goods returns have been properly reversed in the day book, order book, or confirmation book.
Let me ask.
Exam
Let me ask you guys something before India goes on. That last one. The auditor should verify whether goods returned have been properly reversed in the day book. First of all, what is the meaning of goods returned?
return goods,
Yeah, meaning?
goods bought back from the business that were previously purchased.
Yeah, you bought it, you didn't want it for some reason, it's broken, you don't like it anymore, so you return it. If you return it, then it's a goods return. That's it. One goods return and good order should go back in stock, right?
Yes, but come out to cash.
Absolutely. Okay. So if it's returned, then it's no longer a sale, and therefore it should not be shown as a sale, and thus it has to be reversed as an item coming in, and the sales account has to be reduced by the amount that came in. Because once it comes back, that item is no longer a sales item. If you do not reverse it, then sales will be what? Overstated. That's correct?
Correct.
Aha. So you guys are learning even a little bit of accounting along the way. Absolutely. Okay. And a lot of companies, persons, for example, if an item is returned and they don't want to be bothered with making an entry, they just put it back in stock and don't do anything about reversing the transactions to take the sale out because no sale occurred for that item that we returned. And therefore, what happens? The sales account is showing an overstatement. And if the amounts returned amount to tens of thousands per year, then that means sales are going to be overstated by tens of thousands per year, which is an incorrect figure. The fact that it's overstated, you can't say, yay, that percent is over, leave it. No, just like in banks, if you're a cashier, teller, and you're over, that doesn't make a bank happy. They don't want it over or short. They want it balanced. Do you follow? And companies are very much the same. Okay? If goods are returned, pass the entry, reduce the sales by that amount. So you do not overstate the company's sales account. Okay? All right, keep going.
Okay. Order book or confirmation book. Examine this register to verify sale confirmed by customers and goods held by customers at their end as sale or return. Sales
Mhm.
register. Ensure that sales have been recognized whenever A, approval is received from the party. B, goods are appropriated by the party. C, period of approval has expired and goods have not been returned. Stock registers and statements. Ensure that closing stock includes goods lying with customers in respect of which period of approval has not expired. Ensure that goods validity returned by customers are duly accounted in stock.
Wow, a lot of things are going on in the running of a company from day to day. That's the other thing I want you to recognize, whether it's a bank, a manufacturing company, a food store, a car dealership, whatever it is, you can see right away. There are a lot of things you have to always be checking. And unfortunately, part of the reason for that is people are either making errors, which is you cannot avoid all the time, but more importantly, people are always looking to defraud the company or a company of its resources, unfortunately. All right, keep going.
Okay. I'll read that. Okay, consignment sales, consignment agreement. A certain and note the following terms and conditions: commission due, manner of payment, adjustment, etc. Risk of bad debts. In the case of lost commissions, consignee has to bear the risk of bad debts. Otherwise, bad debts are borne by the consignor. Reimbursement of consignment expenses.
Yeah,
So-
eligible.
Sorry, eligible, sorry. Sorry, my phone keep freaking out.
I mean,
Yes.
eligible.
Sorry, looking for it. I lost. Eligible expenses, extent of reimbursement.
Before
Good.
you go on, let me say for the purpose of this group, I know you see consignment sales. You probably wonder, some of you, what the hell is that now? Uh, when goods are sold on consignment, just for your information, because you guys are youngsters, you have a lot of life to go. You never know when you're going to run into these expressions and when you need to know them. That's the other thing. Remember, I told you this class is not just about passing your exam. It's not just about being able to understand the audit process. It's not just about knowing what is expected of you as an employee to make for a successful audit. See, all kinds of reasons I'm just flying out of my mouth that you may not even be focusing on yet, because you're just trying to survive the class. Doggone it, another class and another test and a research paper. What the hell? But later on, you'll discover that a lot of this stuff will come back and you'll be like, oh, oh, okay. So what is a consignment? Whenever goods are on consignment, in the case of a car dealership, for example, in the United States, they might send 500 cars to ABC Motors in the Bahamas. Um, and what happens is they will say to ABC Motors, by a consignment agreement, we'll send them to you. You don't have to pay us for the cars, but every time you sell a car, you get a commission and you send us the rest of the money. You follow, everybody? Everybody get that?
Oh, yes.
Okay.
Yes,
So
yes.
under consignment, you could have a dealership and not have to spend money in order to sell the
I
car.
think Burns House does their liquors on consignment, so a lot of the parties.
Absolutely. You're absolutely right. Okay. That way, Burns House and car dealerships who do sell on consignment, or anyone, you don't have to come up with cash up front. You sign an agreement, you bring the goods in, you protect them, you insure them, whatever. You agree on how that's going to work. And then every time you sell a quantity of liquor or whatever the product is, a car, whatever the case might be, you get a commission on each sale. And then the rest of the money you send back to the dealership who sent the consignment to you. Okay, by all means. All right, so if you have a consignment business, then the audit is coming in to make sure that the consignment agreements, etc., are appropriate. And there's no hanky-panky going on by you who run the company or the company that's consigning the goods to you. Okay? All right, keep going.
Uh,
Good. Good.
Hey, Mr. Wilkins, I meant to say Super Value does a lot of their goods on consignment as well,
They do,
from
absolutely.
Thompson's Trading and the different places.
Absolutely. So a lot of you may not know, you see stuff sitting in Super Value, you see cars sitting on a car lot, you see alcohol sitting in Burns House and so on. You figure, man, they must have a lot of money to buy all that stuff. They don't always buy all that stuff. Sometimes, but not always. Okay? Wherever there are consignment arrangements, that's how it works. They agree to put it in the stores and their business and sell it for a commission. Okay? So everybody, it's a win-win situation when consignments can actually work well. Okay, keep going.
Okay. Goods outward book. Verify goods dispatched by reference to the pro forma invoice, consignment daybook, goods outward book, transport documents, acknowledgement of the goods by the consignee and the account sales, stock registers. Ensure that the stock lying with the consignee at the year end is being taken in the balance sheet at cost on a consistent basis and credited to the consignment account to arrive at the result for consignment transaction. Ensure that no profit is taken for the profit on goods remaining in the hands of the consignee.
In other words, you don't have to even understand all that stuff at this stage of the game. But once you understand what a consignment is, you will realize that all of these things are being checked to make sure that there's no keying going on in relation with the consignment agreement, either by the consignor who's giving the goods or the consignee who's receiving them. Okay? All right, keep going.
Account sales. Verify whether consignment sales are accounted by crediting consignment account and debiting the consignee's account. See whether the summary of transaction reported, example sales made, expenses incurred, commission due, remittance made, balance of stock, and amount due from /2 either party is appropriately disclosed in the general ledger. Form F. For goods sold through agents in the course of interstate trade or commerce, verify whether Form F has been obtained under the CST Act.
Of course, that is the United States feature, but again, auditing is a universal language, and so whether it's in the United States, the Bahamas, Afghanistan, or Russia, or North Korea, God forbid, nobody knows what they're doing as far as accounting and audit is concerned. They do whatever they feel like doing, but the point is, again, whatever the compliance requirement is, they have to be checked. Okay, keep going.
Okay, consignment account. When the goods are consignment above cost, ensure that necessary adjustments to remove the loading are made at the end of the year. Verify whether necessary adjustments are made at the year end in respect of unsold good, commission, and expenses incurred by the consignee. Confirmation. Obtain confirmation of the account balance from the consignee.
Thank you, India. Fantastic job. I know it was dragged you through all that crazy stuff, especially this bloody chart. Let me just say something about this auditing program or this chart that we're looking at. I will not hold you responsible for the details on the right-hand side of the chart. I will just expect that you would be able to list a couple of the documents that are outlined to be audited by the auditor, okay? So please make a note of that. The areas to be audited on the right-hand side, I will not hold you responsible for that for test purposes. Hopefully you will read through it again, though, just to enlighten yourself a little bit more. You don't, at this stage of the game, you do not need to know that in detail, okay, because it will not be of any great benefit to you in terms of the consignment aspect of it. I just want you to be aware that all these different kinds of things that occur within businesses are subject to the audit process. Okay. The only thing I'd like you to ask you from this particular table, perhaps to list a couple of the documents that are to be seen by the auditor. Okay. Everybody get that? Yep, no?
Yes.
Okay, wonderful. All right, let's see who's going to finish us up. Gretchen, are you still alive and well, awake?
I still alive and well. I have to go to my because I can't get my Zoom up on my laptop. So let me find. Okay, just save it to my notes. My phone was dying.
Oh,
Hold on, because I thought I printed it. For some reason, I didn't get the part with say voucher. I didn't get this. I must see missed this box, and they had verification.
some crazy things happen when you're trying to get stuff done, correct?
Yeah. So what I doing? Right.
Oh, we're down to sales return.
Okay. So I have to read from my phone and open it up by sales return.
Okay.
1. check the total of sales return journal and find the amount recorded in the profit and loss account. Number 2, check every item of sale return with the credit note sent to the customer. 3, check the entry in the gatekeeper record for return inward movement of goods and check the internal control. Verify the entry and stock register. Compare the extent of earlier year sales and return with that of the current year. The sales return in the beginning of the year and at the end of the year should be carefully scrutinized. Inquiry should be made if there is a wide gap between the original transaction and the return of goods. If the goods are returned for unacceptable quality, inquire about the steps taken after the return of the goods and verify the documentation.
Now, let me say this before she goes on. Sales returns, as simple as it might seem, for example, you make a sale and somebody returns an item. They have to be carefully checked, but as they go in stock, you go back in stock, the sale should be reduced by the amount of the item returned and all this kind of stuff. If you don't do that stuff, again, sales will be overstated. And if you don't monitor what happens to the product, it may never get back into stock. Folks, if nobody's checking, they'll just tuck it away and drive home with it at the end of the day, for sure. Okay? And we must constantly be checking the sales returns to make sure that whatever is supposed to have been returned, there's documentation to prove it. But sometimes folks might say there was some sales returns and it's okay, where's the documentation proving it was returned? And so you can't find it. It got lost. It got torn up. Water fell on, whatever the case might be, you cannot verify it. The auditor really doesn't want to hear that. All information should be properly recorded and documented and filed. Okay? That is a red flag when you cannot produce the evidence for an auditor. Proof of what the transaction was and how it occurred. Whatever the explanation, it might even be legitimate. But short of a
proof.
yeah, you have to have proof. Okay? If somebody cannot provide you proof of anything, that is a big problem. Now, of course, somebody may have robbed them, maybe, and even that's not 100%. But sometimes people steal money and say they were robbed, by the way, hoping that the organization or person, whomever it is, will just accept their story, feel sorry for them, and not report it to the police. Okay? When in fact, they were never robbed. In fact, some people around the world, if they're going to make a deposit, they'll make a deal with somebody they know to run up on them, beat them half to death, run off with the money, go to the hospital, get patched up, and then they split the money. How about that? So you can't even send your deposit with every Tom, Dick, and Harry. You need to know who you're sending it with. You shouldn't send one person because one person can plan stuff and so on. Okay? Welcome to the world of checks and balances. That's the auditor's world, internal or external. All right, keep going, Gretchen.
Okay. Recovery of bad debts off. Ascertain from the trial balance the amount under consideration, and it should be taken to the profit and loss account. Check the entry pass for the bad debt written off and its authorization. If the amount is received from a party under liquidation through his liquidator or official receiver, check the letter from the person and check the amount which is received along with the year in which the original debt was written off.
Check, check, check. Yes, keep going.
Trace the amounts in the bank statement. Check the correspondence with the party and with the official receiver or liquidator.
Check, check, check. No matter what you're doing, you have to verify. That's the key in the audit process. All right, keep going.
Rental receipts. Check the details of the agreement, including the amount and terms. 2, follow from the original documents. Check the rates, period, send payment method, whatever it must be.
And not sand, take out the S, and.
Okay, period and payment method. Okay. Check the outstanding rent for last year and find out which of the two receipts are for last year and how much still remains outstanding.
I want you guys to notice that in each of these categories, we're talking about different kinds of income. And these are just here to acquaint you with the fact that whatever type of income that the auditor is auditing, the whole idea is to check and verify specific to that particular set of income to make sure that the proper amounts are being collected, the proper amounts are going into the bank, and folks are not finding ingenious ways to run off with your revenue, period. Okay, that's what this is all about. All right, keep going.
Okay. Check the entries in the cash with pay in slips and the receipts issued. Check the outstanding rent at the end of the year and see that provision has been made for the same. Next year's record may be verified to find the receipt of the same. Interest and dividends. First, check the income stated in the current year profit and loss account. Ascertain the amount received on account last year and find the outstanding receivable balance. From the cash book, vouch the entries for income received. Check the tax deducted at source, TDS calculation, and verify the effect given in the ledger. Compare the income received in total with that of the last year and inquire about significant variation. 6, get a list of investments and check whether the income on all the securities and investments has been received. If any securities are pledged with banks, get a certificate from the bank. Ascertain the income for the year still to be received and check whether provision has been made for the same. Okay. In cases where interest is received, check the calculations. For interest from banks, verify the entry in the bank statement. For fixed deposits, check whether any FD has matured or any FD were recently established.
Now, before she go on, let me say this for you guys to show you that this does not only apply to companies. If you have a CD or savings account with your bank, and it's a bank that is actually paying you interest, when they send you an amount of interest that is due to you, some people just accept the bank's word that it's correct because it's the bank. The bank is God and God is never wrong, so I don't need to check, is what some people seem to think. But I suggest to you, if you have a situation and you're expected to get interest income from the bank on your CD, your fixed deposit, or your savings account, you should always check the amount that they sent as your interest to make sure it was properly calculated. Some people have found that when they actually calculated, the amount indicated as interest for them was actually incorrect. Okay? Sometimes it's an error by the bank, and other times it may not be. Have to check. All right, royalties received, another form of income.
Okay. The auditor should see the relevant contract and examine the important provisions relating to the conditions regarding the payment of royalties. In particular, the rate of royalties, mode of calculation, and due dates should be noted. The periodical statement received from the publisher and the calculation of the royalty should be checked. If there is any deduction on account of recoupment of royalties for that prior period, the records for earlier royalty receipts should be seen to ensure that the amount of the deduction is as per the contract. Royalties due but not yet received should have been properly accounted for.
Question, does anybody know what royalties are?
Um,
Oh, God.
Yeah, Google it. Somebody Google it. Royalties.
I
What
know
are
what
they?
it is. I can't take it off the bottom of my head.
I know.
I know when you pay for royalties on subscription, they similar in the central bank guidelines. I think you need a central bank approval for royalties. There's some ownership to a company.
Getting warmer by the minute. Anybody found it? Google it.
when I Google royalties income,
Yeah, what do you
that's
see?
the amount someone pays you to use your property after you subtract the expenses from your property.
Yeah,
Royalty income includes payments you get from a patient or copyright or some natural resources that you own.
yes. So we own the rights to a book, or the rights to a decal, or the rights to some patent that you have, that you created something, whatever your rights are. If somebody uses that, rights to a song, okay? Let's say you're a Bahamian songwriter and singer, or songwriter alone, and somebody wants to use your song, they, in law, they should be prepared to pay you royalties for that song, for using it, okay? Certainly in places like the United States and Canada and UK, you cannot use somebody's song without their approval and without paying them royalties for using it. So for example, if you turn on the TV and you see an ad and they're using one of Michael Jackson's song with him back in the day, doing the moonwalk or whatever the case might be, singing then technically they really have to go to Michael Jackson's estate, even though he's dead. His estate is still responsible for collecting any royalties for the use of any of his work in ad infinitum, indefinitely, forever. As long as somebody wants to use his or anybody else's work, they have to pay royalties. Okay, that's how it works. And so this is really just the accounting side of royalties. And when the auditors come in, they want to make sure if the company is supposed to receive royalties, that they're receiving all of they're supposed to get. If they're supposed to pay royalties, that they're paying all they're supposed to pay. Okay, for sure.
How royalties, how they calculated? Or does everybody have like a certain like price or whatever?
Yeah, everybody they have their own price that they expect to get for the use of their work. There's no standard like $500 every time you use the song for everyone. It doesn't work that way. Okay? It'll depend on the individual. They will tell you how much they expect to get for royalties. If you like it, you pay. If you don't like it, too bad. Good question, by the way. Okay? By all means. All right, keep going, Jackson.
Audit of expenditure. Purchases returns. Where a part or whole of a consignment of goods are found to be defective or of a poor quality, the goods are returned to the supplier and his account is debited. The debit is raised in the purchase returns book on a debit note. The supplier, on receiving the debit note, issues a credit note indicating his acceptance of the debit. Thus, on receipt, it is attached to the debit note. All these entries should be verified by reference to the record kept in the goods outputs book or the store's record. These are funny names. The original invoices through which the purchases were made should be reviewed to confirm that the nominal account, which was originally debited on the purchases being made, has been subsequently credited in part or whole of the goods contained in the consignment that have been returned. Where the purchase returns are large, either at the beginning of the year or at the close of the year, these might be fictitious, entered to cover bogus purchases recorded earlier. Therefore, the nature of the transactions must be investigated. The rebate in price and allowances granted by the suppliers should be adjusted through the journal on the basis of the credit notes received from the supplier. These should be verified by reference to the original invoices.
Thank you very much, Gretchen. You said something interesting while you read under your breath. You said these some strange words. And yes,
You know,
for-
the
yeah,
good open book.
yeah. For those persons who don't actually use them in practice, they do seem very strange. And the term goods outwards book is more of a British expression, even though sometimes we still use it depending on what type of business that we have. But really, goods outwards book is really will record anything that's going out of the firm. That's all it is. No big deal. Okay. And of course, the store's record is the store's record. Anything coming into the firm has to be accounted for and put into stores. Nobody can just walk in and grab stuff. Somebody's responsible for opening the stores area and giving you what you need so that you can keep track. So that's really all that means. Okay. And so our reference to this stuff is that whenever goods are returned to the supplier, we have to make a record of it. Whenever the supplier receives it, the supplier has to acknowledge it. And all these things need to be done and properly filed away so that when the auditors come, the auditors are expected to check these transactions to make sure that all the steps are carried out, that the goods are returned, that the supplier receives it, makes a note to say, I got it, and I received the goods back, and the adjustments are then made in the company record as those goods are no longer in inventory. That's really what this whole process is about. So what kind of question can you get? Man, I'm not gonna ask you to reproduce a whole stinky paragraph. All I really want you to know is that in a case like this, the auditor will just be coming in to make sure that the purchase returns are properly accounted for. That's what I expect you to know, okay? For your examination purposes. But of course, I drag you through the mud so that you could hear these funny words and get the feel for the kinds of things that are going on in the real world. Maybe not necessarily in your world at the moment, but certainly the rest of the world is feeling and knowing and acquainted with these things as well. And it's never a bad idea to have at least an idea that this madness exists. Okay, that's the idea. All right. So now we've come to the end of, what is the topic of this module again? Anyone?
Vouching.
Vouching, yes. And all of a sudden, vouching has all heaven and earth in it. But I hope that it has left you with the same impressions that the previous stuff has left you with. Are you going to remember everything? Hell no. It's not designed for you to remember everything. It's designed for you to commit the maximum effort, and certain things will just automatically stay with you. And if whatever does not stay, if you need to make a reference, you can find it. And when you find it, it will not be totally okay? That's the point. All right, any questions? Okay, great. You guys are in for a little luck tonight. We're done a little bit earlier than usual, so I am going to allow you guys to hit the road. Hopefully you'll use the remaining few minutes to study, which I doubt. Instead, you probably,
And I tired.
yeah, you should
We
hit.
doing audit inventory mid-year, so I've been working in the sun all day, even get a sun tan.
You have to work in the sun?
Yeah, and I ran steel-toed boots.
What the hell? Why did you have to work in the sun, Gretchen?
Inventory, because you have to check the stores, and some things are stored on the outside.
My God. So
But you see where I work?
yeah, that's a crazy job. But wherever you work with as inventory, it always gets stinky at least once or twice a
Yeah.
year. All right. So yeah, and it's a very tiresome job. So what you need to do is take my first recommendation, go to bed wholesale, get up 4 o'clock. How's that?
We hadn't gone to sleep for my reach home, but they let us go off fisheries. Like, come on, I have to sleep. I just get up 6 o'clock. I wouldn't make it to class.
Okay, so you had a power nap.
Power nap.
That's good. So then you might be able to put in an extra hour of review then before you start feeling sleepy again. And then that would be really
Hopefully
cool.
Sunday we ain't had to work, because we supposed to work straight to Sunday.
Of this week,
Yeah, this weekend. That's an unusual, a special assignment.
wow. And look when it came up, right in the middle of your class.
Machines going on, right? One thing right after the other.
Yes. And that's what makes this whole thing
So
intriguing.
you never say auditing is a lot of work.
It is. And what
Jesus
you're
Christ.
doing right now with that stock taking is part of the work. Because
Yeah,
you are doing that for auditing purposes.
right. So you have to vouch and verify, and you
That's
gotta count
right.
and see and all that
Yes.
stuff.
Yes, I hate stock taking. I did it once or twice in my life, and that's the part of accounting, the accounting part of things. Even though if you're the accountant, you don't have to actually do it. Some other people have to suffer through it, but it's the stinky part of it. Okay, but it's a very crucial part. Like you said, the inventory process, counting process is a vouching process. You cannot guess, you cannot assume, you cannot estimate. You have to count, apply the amount, calculate it, and check to make sure that the total is correct. Period. That's it. For every single thing. That stinks. But welcome to the world of vouching and the audit process. In fact, that's a perfect example of applying the vouching process for sure. Any shortcuts you can take? No. You have to do, well, some people in some firms take shortcuts. They estimate. It looks like 25 boxes over there times 12 in the box times the price, and they put up a number and call it a day. But technically, it should not be like that. You should be able to properly account for each and every set of items individually or in bulk properly so that the inventory figure at the end of the day is correct. Because if it is not correct, then profits will be over understated. Inventory in the balance sheet will be over understated because the numbers that Gretchen those came up with are fake numbers. They're not correct. Okay. All right, great stuff from Gretchen for introducing that part of the audit process, which is crucial and which really confirms in our mind the essence of vouching and the importance of the vouching process. There you go. So now she's right in the middle of the thing that she's reading about, right? Thick until Sunday. All right, so good luck with that. Glad it's you and not me. All right, any other questions? Fantastic. You guys have a great week. I'll see you next week, Thursday. Like I said, somewhere between now and Saturday, your grades should be rolling in. God forbid that everything should go the way it should go. All
And I
right.
remember see them grades.
Don't worry about it. It's only a portion of the overall process. There's a lot more to go before you come up with a final grade. So don't stress about it. Just keep on trucking with what you're dealing with.
Before we go, you don't give us no tips for answering that first question, but 1,000 words summarize a case study. We're all over the place.
Oh, well, first of all, for that particular case study, 1,000 words, not necessarily a lot of words. Even though,
That all over the place. That have me scratching my head.
yeah, what you do is you first of all, you read through the entire case. That's the first thing. That's why you cannot wait until the last minute. If you do that last minute thing, you're gonna get stuck, you're gonna be stinky, and you want to curse God and die. And you can't do that. First of all, read through the whole case completely. And then secondly, when you're doing your second read, you underline what you feel are the important points in each paragraph. In other words, if the paragraph says it's important to vouch all the inventory items, and then everything is just a description, you vouch it by doing this and that and that and that, you don't need the details for that, just the important point. All inventory, all cash should be properly and completely vouched or verified. Okay, so you do that for every paragraph. Underline the important point or two or three in that paragraph.
Okay,
Once you say, and once you've done that for every paragraph, then you go ahead and put them together and count them and say, okay, is this 1,000 or more? If it's less than 1,000, then you go back and to each paragraph and add an extra second important point given the amount of words that you need that you have left over. See my point? And then it becomes quite manageable.
okay, thank you.
No problem. Any other questions? It's a good question, Gretchen. A lot of people get stuck with that. They just don't ask. All right, fantastic. Remember, COVID is not going away. They had 46 more cases recently. Please be careful. Don't take anything for granted. Tell family members they still can't breathe in your face and come too close and all that stuff for any period of time without a mask and so on. It's still out there. So be careful, and I'll see you guys next week. Take care.
Hello?
Hi, Ebony.
No, day now, sorry. You said, I'm looking at the case study again, and it's saying question 5.
Uh-huh.
Given the facts of the case, what should be the management's perspective and the auditor's perspective?
Right.
What type of responses are you looking for? Because it's so vague. The questions are so vague.
Well, I know it seems that way. Management's perspective is this. Given the situation with that company, what should management do? And what should the auditors do? That's what that means. For example, management should put in better internal controls. Management should make sure that more than one person is involved in the process. Management should make sure that internal audit is doing its check. That's what that means. But you have to go through the case and see what the problems are and then apply what management should do and what auditors should do. The part about auditors should not be that difficult because based on the problems in the case, between the solutions that they mentioned in the case and the stuff that we've been going through for the last couple of weeks in terms of what the auditors should be looking for, when you combine those two, it should be able to help you to come up with what the auditor should do. The auditor should check this and check that and do this and do that based on what you already know auditors should be doing. See my point? They know?
Thank you. Yes, thank you. That is clear.
I'm glad you raised it. A lot of times people are stuck on something and they don't raise it. And when then they pass it in and didn't get the information and they don't get the credit that they could have gotten. Do not be afraid to ask the question if you're not clear. Because sometimes like today, you ask it and like, oh, that's what the hell that is. I thought that was something I couldn't do. Now it's something you can do quite easily once you make the application, now that you've asked the question and you've gotten clarification. So that's really always the idea. Okay. And if you think about any other issues that you want to raise while you're doing your paper in our next session, please raise them so that you can get the appropriate feedback to help you do the best job you can do. All right. Okay, so everybody take care and I'll see you next week.
Okay, good night.
Good night.
Good night. Good night.